And officially, good morning and welcome to the Market Watch Group Weekly Market Prep. My name is Scott and I will be your host. We're a little light today, so those of you who are here live, you carry the burden for a little higher level of interaction as we discuss. We need to make sure that we're getting multiple viewpoints and perspectives as we evaluate, assess market conditions, and make determinations that will impact how we trade. You know, this is my favorite day, always, the Sunday session, where the chimp is asleep in the cage, the professor's at the computer. We can do some work here as we prepare for risk. We're a day away now, right? We've had a chance to catch our breath, feel a little better. I always feel like I assess conditions most objectively on a Sunday. That's always been my thought process. You can make an argument, and you might do yours on Saturday, and then meet with us today and talk about it. I didn't see if you posted yours or not yet, um, Stephen. I'm actually kind of curious. Like, all right, does our posture improve? Does it stay the same? I can't see it dropping. If you did yours, tell me. If you don't have to tell me what your score is, just tell me if it got better, stayed the same, or got worse. If you've already done yours, let me know. Or if we're going to all do it together, great. Okay, quick check in with the disclaimers. As always, education and illustration purposes, yada yada. We're not brokers, we're not advisors, we don't give recommendations, we don't provide guidance. Okay, and let's talk about our agenda. Oh, okay, Stephen, you were shocked, and it is posted on chat. Got better, love it. Very cool. Today's agenda, of course, market posture. We're going to go then, we're going to score each component. We're going to look at the economic calendar, what's coming up, what are we thinking about? Um, Big chunk of inflationary data this week, so we just want to make sure we're understanding at what point do we think those expectations will start to influence the market. Sector searching, I believe, ooh, someone keep me honest. I believe I called out industrials, that there's strength in industrials, but that we're a little light. Does that sound right? What do we? I feel like we're pretty good on financials and technology. Like we've got a strong watch list for those things. Maybe if I'm wrong, tell me what it was. But we definitely can spend a minute or two running a sector search to make sure that our watch list is reflective. Um, Stephen just said he's surprisingly more bullish. I said that this last bullish move, certainly was more than I was forecasting. It was meaning, did I have a bunch of bullish trades on? No, I had eased up based on some of the characteristics that we've seen develop, particularly around a time, May, June, where we cyclically have what are known as the summer doldrums. So, yeah, I look at it and I think, was I still haven't come to a conclusion? But I say, hey, should I have been more bullish and I allowed my bias to overly influence me? But for me, there was enough correlation. In fact, here's what's interesting. When we talk about the correlation with what happened back in September, October, that ultimately turned into a 10% correction, the first step this time was actually worse than the first step last time. So I'm like, it feels even worse. But the market recovered. We we got bought to new highs despite not having above average volume days. Where I've told you before, we don't absolutely need it. We typically look for volume for breakouts. We're like, ooh, above average, where it's like there was a surge in the buys. And yeah, I would have expected that we did need it for this, but we didn't. It did it without it. This is that proof that I'm telling you. We don't have to have volume. It can just go up. If you don't have sellers, you don't have to have more buyers. And there weren't. For whatever reason, the sellers that we saw that came in, they stopped. They just didn't show up again. It's just like, yeah, I don't know. What the hell? It looked like they were. It was ramping up for it. And then it just fizzled. And here we are. Okay, we adjust, we adapt, and we move forward. So we make sure that our watch list is strong. And then from that watch list, obviously, we want to build what our shopping list looks like. Here's the thing, of course. Market's closed tomorrow. There is no meeting tomorrow. I was wondering what we should do with the cocktail hour. Any thoughts? If I held it, would you go? Should we just kick this week to next week? Can't really move it to Tuesday because we're already meeting Tuesday for an educational session. So if you have a thought, weigh in. I can go either way. You know, if people said, "Hey, you know, everything's wrapped up," I would come in and chat. It's nice to talk about the market kind of casually. Or if you're just like, "Yeah, I don't think I'd go." If you don't think you'd go, say it, and I'll just cancel it for today. Will not be there. Thank you, Michael. Anyone else, weigh in if you can. All right, let's jump in. Let's get to work. Let's get working. Where is our posture? So let's just kind of talk about what we've seen. We were super bullish all year long. January, February, March. We were hitting sevens, this market of ours. We were like, yeah, giddy up. All the way back from, where were we? You know, November. Yeah. That was wonderful. We all loved it. And then it just, as we got into March, things started to ease into 6, and then it fell. And then we've now climbed back up 275 to a 3 to a 375. Okay, so what's getting better? Oh, what did I just do? Did I erase something? Hold on. There we go. To a 5. Long term hasn't changed. Our long term score has been a 1.5 the whole time. What is it going to be now? I still feel like, let me get SPY up. I still feel like it's the right score for the angle we have. Let me. Oh, now you're 1 1/4. Okay, so you're catching up with that one to where I am. Got it. Yeah, I mean, I still feel like I'm in a pretty okay place. And let's get this to weekly. And let's get a little more time. Okay, there we go. Yeah, that looks right. Yeah, we have an uptrend. It's uptrending. There's a lot of different ways you could try to connect lines. You can see how many different varieties of lines I have, remnants. I've got this. Let's see, where's my drawing tools? Let me start this up. All right. So I've got this set back here. You can kind of see there's one and there's one together. I believe we had that was a 1. I'm trying to remember, or maybe that was 1 1/4. I think that was a 1. 1, Michael said yes. And then I believe the red lines here is where we shifted to 1 1/4. So you can kind of go back in time and trace our score. That's why I like to leave these remnants. Tell me if I'm wrong though, right? Michael's keeping me honest. Does that sound right, Michael? Those red lines were more than up to a 1 1/4. And then we kicked it here when we broke above that red line. That's when we kicked it to 1.5. That makes sense. I like it still. 1.5. That's my score. And does that score hold up? Well, yeah, you'll notice that on this, we didn't get back down to this. This red line was the bottom of the 1.25. We didn't get down there. We only got to here. And right now we're moving back above that red line already. 1.5 feels right to me. I'm a 1.5. I'm a 1.5. Sounds like Michael's a 1.5. Stephen is a 1.25. At the end of the day, what? We see bullishness. This is bullishness from the institutions. The long-term trend is bullish. Yeah, period, right? So, good underlying score. Anyone have anything contrary to that? And Glenn, who is sitting in with us today, feel free to throw out any insight you want as we go through this process. But let me go back. So, remembering 2 points. So, what would it take to get to 2 points? People always ask me. Well, from right now, I wouldn't even think about two. I'm just thinking what would take it to get another quarter of a point. This thing doesn't move that fast. Look how stable this is. This is the long-term score. It's been 1.5 since February. February is back when we first said, look, it's stronger now. Okay. Now we go to the short term. Much different, obviously. And let's jump down to 6-month daily. And here's the thing, even at 6-month daily, people are like, why don't you go to 3-month? Because I like to see this whole thing, even though I'm definitely focusing in on what's going on. Nope, that's not what I meant to do. What's going on right now? I don't think this is going to let me draw now. I'm having the weirdest thing with I think I just need to restart this computer. But I'm going to have to just kind of move my mouse. This is where I see the trend now. It's going this way again. And you'll notice that we are slow sometimes when things are going down. Someone might be like, oh, did you get like neutral or negative? No, I never got below like a 1, I don't think. Oh, it is working now? Oh, it is working now. Okay, here we go. There it is. What's the score here? I mean, here's 0, and this is about as good as it's ever going to, well, maybe not quite that much, maybe more like that. I mean, that's not bad if that's what we were starting with right there. 1.5. Michael's calling out. Let me just see. That's where I am. I'm a 1.5. Is it getting better than last time? Here's what happened last week. 1, 2, 3, 4, 5. So from last week to now, did it get better? No. It tried, it gapped up one time, and on the one time it gapped up, where did it finish? At its worst possible point with increased volume. Look at 526. 526. 526 is today. Is that what you mean? But yeah, so for me, I showed 5. Oh, sorry, you're right. You're right. Over here. Oh no, I forgot to change the date. Or it didn't take, maybe. That's what happened. I backed that up too many times. There we go. Okay, so 1.5 stays the same. 1.5 stays the same for me. I don't see anything in there that indicates I would raise my score up. And right now, if anything, our stochastics is coming down. Now, again, this isn't scoring. This is just sort of talking about trading posture while we're assessing and scoring our market posture. Market posture is what do we think overall? Trading posture is what do we do Tuesday morning when the market opens back up? What are we thinking about? What exact actions If you say I'm bullish, does that mean you start slapping bullish trades on every morning? Of course not. Right? Bullish is my overall. My day to day, that's when we're going to be focusing more on support and resistance and individual signals. Hope for the best, right? Hope for the best. Yeah, but for me, what am I thinking? I think we hit some resistance. Was grinding at that resistance level, starting to ease up. I want to see if it's going to continue easing. We're well above the 50. We never had volume get us there. Yeah, I think we should. I definitely think there could be that pullback. So let's keep going and see where it leads us. Volume then. So at this point, we seem to have a pretty good consensus that right now our long-term trend is up. Our short-term trend is up. We generally see buyers in control of this market. Out of the first 5 points, we're 3 out of 5. That's a pretty good score. All right. That is soundly bullish right there. What about volume? Volume's been interesting. Volume got whipsawed a little bit. You can see back here when it dropped to a minus 0.75, minus 0.75. Why? Because there was just no buyers. Only increased volume days on selling days. No increased volume days on buying days. Only selling days. Now what? Now we're a 0. Are we? That's one I'm a little concerned about. So let's jump in, drop it down to a 1 month daily chart. Now, this day here, average volume 72, that day's volume 72.7. That had 101%. Where are the above average volume days? This one, well, that's not right. Now it's not working again. It's so weird. Sometimes the drawing works, sometimes. This one here, definitely a selling day, but it's only got 3 days before it falls off the chart. This one here got a little lower, also a selling day. We've been chalking that one up, but also about to fall off. And then you come over here, and you have 1 day here. This was above average. Remember that our threshold is 5%. 5%. This one was about 107% volume. For who? Started for the buyers, turned into the sellers. I'm still gonna leave mine. I'm gonna say that these are so old that they're gonna fall off. One day for the sellers compared to what we have. I'm gonna leave mine at 0. I'm gonna leave it at 0. And as I think about it, it would be very, very hard. It would be very hard for me to give this a negative number and have it pass my litmus test. Right? What's happened during this chart? Well, we started here at 505 and we ended here at 530. We're up 25 points. That's 5%. So it would be very hard for us to say the sellers are really showing more strength as the market is up 5%, right? So that's where now, just because the market's up 5% doesn't mean we're like, well, that means the buyers are in control. It doesn't. I'm saying I'm giving it a 0. There's nobody is showing more conviction right now. It's kind of a contest of uncertainty between buyers and sellers. Who can show less certainty? Minus 0.5. Yeah, I mean, I hear what you're saying. Are you seeing more days than I'm seeing? Or are you at like 3 and 1? You have a -3 to -1? And again, maybe it's that I'm more subjective, and that's admittedly so. It's more subjective where I'm like, you know what? Those last couple of days, now that they're only um, the the average volume line's here. It's always been a 20-day average volume line. So I admittedly look at these and I think, you know what? At this point, those are irrelevant to me. Why are they irrelevant? Because we clearly broke back above the 50 right here, in fact. It didn't have volume. It did it right on average volume. Bam. But from this point, what has it done? It's just gone up, 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 up. Does that mean that there's been a huge amount of buyers? No, we can clearly see it did it without a lot of buyers. So if that means that there weren't a lot of buyers, that means that there were even less sellers, and that's my conclusion. My conclusion. My conclusion here is that nobody's in control. The sellers clearly are not. And even if they have one day that they got 2 days ago, that's not enough for me. Remember that a tie, if it was zero buyers and zero sellers, I'd give it a 0.25. That's a tie goes to buyers. So it has to have a little bit of extra selling, like it does, just to get it to a zero for me. This is slightly influenced based on the inherent increased in sentiment that we have around selling days. That's how I tend to score this. So, all right. Moving on. What do we know? Halfway through? No, 6 points through. I mean, we're still on track. Nothing's changed. Major market. This will be interesting. The where is it? Where are you? Oh, I think I'm missing a window. Okay, give me 1 second here. Okay. Let me get this ready. Okay, let's get this over here. I'm also gonna need Finviz. Yeah. Closed my window, unfortunately. Let me get things back up here. Okay. Okay. Here's what we know. 200 days. Who's at the top? Now I want you to notice where we are for this 200 days. This now is right at the tail end of summer bullishness last year. And here's that drop we talk about. That August, September, October, right? Where it really kind of started to fall apart. And that's where we got 10%. More on others. More on others. 10 on some, more on others. And you can see that the Russell took it the worst. Why? Well, because that was based on realigning to interest rate expectations, and small caps are obviously most subject to that, right? To those realignments. Okay. So we have the Russell down here, but you can see how fast it came back. And then from this point, where are we now? Well, the NASDAQ's still on top, bullish. The Dow is holding back, which is, confirming bullish. It's in a lagging position. But it can't be that bullish if the Russell is also in a lagging position. That's what's missing from this perspective. So then we start to zoom in and we go to 133 days. So we went from 9 months to 6 months. You'll notice that now all of a sudden we're only looking at the recovery. Look at our starting point. Now it's the bottom after the correction. What happened? And you can see just how much of an overreaction the small caps had. I mean, that's like absurd, where it's like, oh yeah, of course this thing came back down. Look what it did. It went up 16% in a month. And then it gave back almost half of it. But then it moved into this. And right now, for a lot of that, it was leading. It's no longer leading everything, but it's still in a leadership position relative to what? The Dow. So I look at this as still being bullish. Where is the money going? It's going into technology, the NASDAQ, primarily. And it's also going into small caps at a faster rate than it is large caps. So more money into the Russell relative to the Dow, for me, indicates a bullish appetite for risk. People want to put their money in things that are growing faster. Let's go down to our scoring time frame, 66 days, the last 3 months. So February to now, what do we have? We have that exact same picture. Who's on top? The NASDAQ. S&P holding in the middle. Leading, but behind these is the Russell. And then in the lagging position is what? The Dow. This looks pretty bullish. I think if Sandy were here, an argument could start to be made to even look at a 1. That's I would probably wait to see the Russell ahead of the SP of the SPY of the S&P. But this definitely is justifying the score we have now, which is a 0.75. So Steven says he's not changing his either. Yeah, I think I would wait until I see the S&P, until I see the Russell move into a consistent position over the S&P, but let's just go see what the 22 tells us. I think I'm good with my score. This isn't going to influence me one way or the other. This is more of the same. NASDAQ on top. Then the S&P. Russell slightly behind. The Dow is lagging. This is pretty bullish looking, I'm good with where my score is, so I'm going to leave it. Steven, where are you at on this one? Major market, 0.75. If I see the Russell move into a leading position, I'll say that's a full 1. That's strong. All the money's going into technology and going into small caps. That's showing overt bullishness across investor sentiment. 0.75, very nice. Okay. Okay, so here's where I thought, if I'm going to increase, it's going to be here, sector rotation. Because sector rotation was like the champion of our last bull run. When we were bullish from back when the market recovered, we were a 0.5 and then we got to a 1. We're like, look how broad. Everyone's like, we're not sure if this market's broad. And we're like, this market is broad as hell. What are you talking about? Look at our score. 1, 1, 1, 1, all in December. January, you had 5 different sectors you could be trading in. I don't know what anyone was looking for outside of that, but that was fantastic for trade. Look how long it stayed that way. And then all of a sudden, woof, that was our early warning on this market turning sideways. March 10th to March 31st, March 10th to March 31st, the sector rotation sort of fell apart. So from right here, March 10th to March 31st, to right in this area here. Interesting, right? That from here to here, our sector rotation was like just fell apart. And then look what happened. So this is what I say when I say subtle, where it's like, should we have had a bigger conversation about that? Right? Should that have been a bigger conversation where we're like, hey, the breadth of this market just crumbled right before what? Now, I mean, at this point, the markets recovered. We're higher than we were. But I'm saying back at that time, I don't know. I mean, I look back. As you look back, do you feel comfortable with how you traded during this little pullback and this recovery? I obviously would have liked to have had more on this last 2 or 3 weeks when it was bigger. I feel like we did a good job before, but I'm thinking, if anything, just seeing that the breadth, the way that our breadth score, that's hard to score. Your score here, our score back there, doom, 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 doom. Yeah, I don't know. Just looking for insights. Let's see what our sector rotation score is now. Okay. This is everything again. So this is pre-correction is our starting point. So we had the last little bit, and then it corrected, and then it's recovered, right? And who's on top? Our most favored technology, communication services. Those are sectors that I've traded bullishly since this group began more than a year ago. Constant bullishness, this leadership. Um, Financials, not always. Since the correction, yes, they moved into a leadership position pretty early on. You can see that back here. By early December, financials were leading, and we've been trading them bullishly ever since. Industrials, still bullish. So there you can see we have 4 now. That's pretty good. That's pretty good. But then you have utilities right here behind it. That's defensive. You have materials. That's inflationary. You have healthcare. That's confused. You have energy, inflationary, but that's regressing, which is nice. You have staples and you have discretionary. Remember, discretionary last year was one of our top growth sectors. Where is it now? At the bottom. The very bottom. Let's go to 133. What's changed? Well, discretionary is still at the bottom, so that's not great. Energy's close. That is great. Staples, that's all very good to see. Who's at the top? Financials. We've loved financials all year, yes? Industrial, same thing. Communication services, there's the S&P. Remember, utilities is up in there. Technology's up in there. As of now, it's like I'm having a hard time seeing how we were scoring this. But remember, scoring comes here. And this is where things have fallen apart to some extent. However, gosh, I'm like, sometimes I look back and I'm like, did we allow it to get negative with that when it shouldn't have been? But I don't feel like we did. But I feel like this thing's absolutely improving, possibly by a half a point. I don't know. We'll see. Let's just see. Let's see. I'm admit there's going to be times where, as we're analyzing real time, we think we're catching it, and then we look back and we're like, was that? Okay. Utilities is clearly showing the most amount of momentum, and there is a defensiveness here that we're like, you can't argue that that's come into play. And you have inflationary pressure from energy here. And you have inflationary pressure from materials here. So yeah, we were bullish coming into this, but then it got real defensive and real different in this scoring time frame. I don't know. It's hard to change. I mean, does it feel like it's still a minus 0.25 from here? Steven's comment is, I feel our sector rotation is neutral, in line with our volume. Well, my volume is neutral. Yours is negative, but mine is neutral. But I agree with you that the sector rotation certainly has been where the concern is. Like mine went negative, and so I'm saying I might still leave mine at minus 0.25. I don't love how strong utilities is and remains. It's not like we're saying it's not like we're saying this is leading. Yeah, I don't know. I was thinking the lead that we had such a strong lead up going into it, but this is where it falls apart. You can see that technology's trying. I mean, there's a few things that are down here that are like we just haven't seen it yet. Let's go to 22 days. 22 days, technology is showing some sunshine coming up a little bit here. Utilities is still right there. Comm services trying. Yeah, you know what? It's just not enough for me to raise my score yet. I'm leaving it. I thought for sure. This is where it can be surprising. I'm like, I don't see how any part of this can still be a negative, but I think with the amount of inflation slash defensive that's just popped into that 66-day time frame and is staying there, I'm leaving mine alone. Let me know what you're doing. Minus 0.25 for me. I'm moving on to the VIX. So I am neutral on volume, and I am slightly negative on sector rotation. I'm quite bullish on long and short-term trend. I'm bullish on major market. I think that the major market is lined up. And I'm quite bullish on the VIX. Okay, so let's take a look at the VIX. Let's see if it's still that way. And then we'll take a look at our watch list. Yeah, we already scored this lower low, right? 1, 2, 3, 4, 5. We'd already scored this lower low. And then it stayed there, gap down, shot up, pulling back. I think we're still in a place where it could go higher. We're at a 12. We got down to 11 and a half. The VIX is low. The institutions are not scared right now. They're not like, oh, something's building up. This looks great. This looks great. Does it look better than it did last time? No, but it's a 1.5. What do we want? That's a 1.5. That's out of a possible 2 points. That's very strong. All of this VIX that we were concerned about back here in March and April just bled completely out. And now 1.5. Yeah, I'm staying the same. I'm a 5, which is bullish. It's not better, but it's bullish. And a 5 is definitely, I mean, you can see we've recovered in a way this time. So if you compare what's going on here as we went from a 275 to a 5, that does seem to be better than what happened. Remember what we've been comparing to. We've been going back a year and we've been looking at this correction. And we said this first move was very similar to this first move. And we had a little bit of a recovery, and we had a little bit of a recovery, but it was right in this area where it kept going, and all of a sudden we're at a higher high. This didn't get to a higher high. This was a lower high, and then it fell apart, and then it dropped ultimately 10%. And over here we got to a higher score. Could this thing fall apart? Sure, but as of right now, I'm thinking it pulls back to the 50 and bounces, because that's what bullish markets tend to do when they pull back to the 50, and I'm bullish. It's not what I think or feel. We just saw bullish trend long term, bullish trend short term. A lack of volume that would have an impact on assessing who's in control of the market. We saw convincingly that the money flow is going into the NASDAQ and the Russell, which definitely has bullish implications. We do have concern still. We absolutely have concern with the sector rotation and where the money flow seems to be going. On that end, there's been some defensive posturing from within the sectors. But then we finish up our analysis with the VIX and we say, look, the VIX is bullish. Most of our analysis is bullish. We're not a 7 or a 6 because we don't have sector rotation in favor yet. We don't have volume in favor yet. If we had those things, that would kick us even higher. So there's more ways this market can continue to improve. Right now, I'm saying I'm bullish enough that all I need is this to give me a pullback, and I'm ready to try to catch something. Let's take a quick peek at what's going on next week. Economic calendar. The big news is definitely Friday, the PCE, right? The Fed's favored PCE. Remember that no market tomorrow, no meeting tomorrow, but are we meeting tomorrow night? Did I say tonight? I meant tomorrow night. Anyways, tomorrow night. But I think we're probably going to end up canceling that. We'll just postpone to the following week. We'll see. I'll post a notice. If the futures are interesting, maybe we will keep it. We have some Fed speak and consumer confidence Tuesday. We have Fed speak and Bayes book. It's Fed. This is our crack now, right? Oh, the market's crack is Fed info. What is the Fed gonna do? I need my fix. Oh, it's terrible. I hate this kind of market. GDP revision on Thursday. Another revision down is what it's looking like. So our dream of having GDP above 3% and inflation below 3% does not seem to be coming to fruition. We're having a hard time getting inflation below 3, and we're having an even harder time getting GDP to stay above 2. Now, to be fair, it's rarely in that situation, just like we rarely have a balanced budget, etc., etc. These are just wish lists. So then we have on Friday, we have a little bit more crack speak. Then on Friday we have income spending. Now these look good. Well, no, we would like income to improve at a faster rate, but spending slowing down, that's good. PCE index is supposed to stay at a certain at its current, with just the month-to-month core PCE index coming down. I mean, if this happens, if this is what we're expecting and this is what we get, the market may still respond positively. It's not improving, but it's not getting worse. We've had too many reports where we're like, oh, it's a little worse. Okay. And speaking of Fed, we're only 2.5 weeks out from the next meeting with zero expectation of the interest rates changing. 10-1 against in July, 50-50 basically, slightly in favor of not changing even into September. I think a big part of this number here is going to be influenced by what we see on Friday this week. Okay, let's get to the watch list. Let's crank through it. Let me get here. I think the watch list is strong right now. Let me get back. I'm willing to trade anything that's showing this surge in momentum, higher highs, higher lows. Apple is included. Let me get to a more reasonable time frame. Yeah, you can see Apple was consolidating. Breakout on good earnings, higher high. Now we're coming into our higher low period. I like it. ACB, I'm thinking about it. AIG, same thing. Consolidating down, staying above the 50, just waiting for the momentum to turn. AMD, I actually think AMD looks okay, but I think there's better. So why, right? Why settle for okay? I mean, I'm watching it just to kind of have a sense of what's going on. Amazon, it's holding up. It's still above the 50. It hasn't taken this out. You can see on this day here, we came down to this level. So if someone pulled the trigger, they might still be in. I still think it's valid for a setup. It's still a higher low, and it's still above the 50-day. But we'll see what this brings. And now AXP looks bullish, looks close. A lot of things setting up. I think we could see some alerts this week for some bullish trades. Could, would, not could, should, would, will. Boeing, I'm not feeling it yet. Anyone trading Boeing? BAC overextended, not yet. Same with Citi. Actually, Citi's pulled back a little, but we'll see. Caterpillar, if it can hold the 50-day, I still think it's a viable setup. CMG looks bullish. Oh, we're so close to seeing that. So close to seeing that split show up over there. CNM, I mean, we've got a lot of bullish stuff on our watch list. Love to see oil pulling back like this. That's giving us a little respite from some inflationary pressures. You can see Costco very strong, but it's got earnings, so there's really not much we can do with that right now. CRBG. I think that looks good. I don't know what the news was when it gapped up, but it gapped up, made a new high, pulled back. Looks pretty good here. Delta. We said Delta was viable on Friday. Some of you may have taken this trade on Friday. Will it still be viable on Monday? Yeah, you're likely to then move into Monday, the first Heikin Ashi candle, the first green Heikin Ashi candle, which might look nice. Okay, here is the Dow. Dow actually still looks okay. Kind of looks like a cup and handle right here, yeah? FCX. Higher high, higher low. There's still bullishness here in materials, right? Not as much in energy, but materials it's holding on. There's Bitcoin. Bitcoin broke out of that consolidation. GE tried it, failed. Tried it again. Working. Gold setting up. Google. Oh, Google setting up magnificently. That's a Core on mine. I love this. Google's a great stock. Looks like it's setting up in a nice way. IWM, maybe. KB Homes. Back, we have a home builder back on the list. Meta, I'd like to see a little more happen. Microsoft, I'd like a little more pullback. Micron looks pretty good for a chip stock. I think Netflix looks a little overextended for the time being. Nvidia, oh, look at that, back up into its old channel. Here's the Qs, looks bullish there. RTX, anyone pull that trigger? We were identifying this one. That looks pretty good. Still worth holding on. SPY. We'll see. TSM, look how strong TSM looks. UUP. Okay, so remember that UUP is an area that we're keeping an eye on, and we'd like to see it break back below the 50, not look like it's breaking back up and possibly holding above the 50. So along with sector rotation, this thing is giving me a little bit of concern. Here's the VIX. The VIX looks great. Obviously, VRT bullish, WFC bullish, and looks like it could be setting up. Waste management kind of neutral. That's why I said I think we might want to find something from industrials. Walmart looks good, but needs a pullback. Materials still looks okay. Communication services strong, energy not so much, financial strong, industrial strong, technology strong, but staples are still strong, as are utilities and healthcare. It's an interesting mix right now. I actually think we're okay for industrials. We have a couple of good ones. No need. Let's talk about our trading plans. We are already back to record keeping. We wrapped up with routines last week. Now we are on record keeping. So it's your log. Whether it's a stock log or an option log, you need to be working on a log.
Sorry, I don't know that.
I don't know why Alexa's talking to me, but you should be able to go download. If you're trading stocks, trade the stock log. If you're trading options, trade the option log. You'll start filling it out. We did a great working session not long ago on this. I need to get those working sessions into an organized structure. But what I did is I went through this. This is a filled out sheet, right? And it has a filled out dashboard so you can see, hey, what am I going to be able to do with this? What does this look like? How does this work? What does this lead me to? So make sure that you are, nope, I just noticed Stephen had to leave. Make sure that you are filling those out. Those of you listening to the recording, because I know there's a good number of you unable to attend the Sunday session live. And hey, I'm open. If we want to try like Sunday afternoons instead of Sunday mornings, if we get more people, I'm open to it. So I'm open to any time Sunday. You know, we can discuss trying a couple others. So if you're listening at home saying, yeah, I'd come in the afternoon, send me a message. Let me know that that's the case. If you want to have this beautiful ability to have these analytics that you can study and use to guide your trading to improve your results the way that this fictional person did, make sure that you fill this out. All right, so so far I only have one person who said they would not attend. So I think we're probably going to cancel Monday unless I, put out a poll and hear back from a few people. AM is good for you, Greg? Good. It's good for me too. I prefer morning. Morning coffee, hang out, then go enjoy the day. So for now we're going to keep it as is. Okay, I'll see you guys Tuesday morning and Tuesday evening. But as of now, it looks like you can just go and enjoy your Memorial Day. Don't forget that the market is closed. I hope everybody has a great one, and I'll see you guys soon. As always, happy trading.